Now we continue how to prepare the statement of cash flow using the indirect method. So the indirect method of reporting cash flow from operating activities uses the logic that a change in any balance sheet account, including cash, can be analyzed in terms of changes in other balance sheet accounts. Thus, by analyzing changes in non-cash balance sheet accounts, any change in the cash account can be indirectly determined. So, this is the data that will be given when we want to prepare the statement of cash flows. So, the first one is income statement. For income statement, please focus on the net income and then the depreciation expense and then gain or loss. Okay, so please remember to focus only on those three accounts. Okay, and then you will be given a comparative balance sheet for sure. Okay, so the balance sheet must be for 2 years. Okay, if it is 1 year, we cannot do the statement of cash flows. Okay, so like the usual balance sheet, we have asset, liabilities, and equity. Okay, so the first step is you need to calculate the increase or decrease of each account. Okay, so the base is 2009 and then you find the difference with the 2010. So for example, for the cash, it is 97,500 in 2010 and then 26,000 in 2009. So we find the difference. Okay, we find the difference. It is 71,500 increase because the cash is more than in 2010. The cash in 2010 is more than 2009. And then for the accounts receivable, same thing. It is 74,000 in 2010, 65,000 in 2009. So we find the difference is 9,000 positive. So it means increase. Okay. And then for inventories, it is 172,000 in 2010 and it is 180,000 in 2009. So it is the difference is 8,000 decrease because it is lower than the last year and then so on until the retained earnings. Okay, so we go on for each activities. The first activities, remember, it is always the cash flows from operating activities. So remember, we focus only for the net income and then the depreciation and then the gain or loss and then the changes of current asset and current liabilities only. Okay, so this is the format, okay, when we do the cash flow for operating activities. So we start with net income or loss. Okay, and then we need to write this adjustments to reconcile net income to net cash flow from operating activities. Okay, step 1, you find the depreciation, okay, from the income statement. Yeah, so for our example, the depreciation is 7,000. Okay, the net income is 108,000. And then if there is amortization, then we add it. So our example, we don't have amortization, so omit it. Okay, and then for the depreciation, remember, and the amortization, it is positive. Okay, and then the next step, we find the gain or loss. In our example, it is a gain, $12,000. So we put it gain on disposal of asset. Okay, so gain is minus, meanwhile loss is positive. Remember, so it is reciprocal. Okay, terbalik. And then after you find the gain or loss, you focus on the current asset and current liabilities of the company. So we go on to the balance sheet. Okay, so we start it from accounts receivable. Remember, for current asset, we start it from the from the accounts receivable. Okay, so we take accounts receivable and inventories. That is the current asset. For the current liabilities, we only take accounts payable, accrued expense payable, and income taxes payables. Okay, dividends payable is a long-term liabilities. Okay, so we take the difference or increase or decrease. Okay, so if asset increase, it is minus. If asset is decreased, it is positive. Meanwhile, for liabilities, if it is increased, it is positive. If it is decreased, it is negative. Okay, so after that, we do the net cash flow from operating activities. So this is the cash flow from operating activities part for our example. Okay, so the net income again is 108,000, and then we write adjustment to reconcile net income to net cash flow from operating activities. So we take the depreciation 7,000 positive, and then gain on sale of land minus 12,000. Remember, gain always minus, meanwhile loss is positive. And then increase in accounts receivable. So you see it from the balance sheet. Okay, so remember, increase for the current asset is negative. Okay, so that's why it is minus 9,000. And then decrease in inventory. So if for current asset, decrease means positive. Okay, and then we go on to the current liabilities. So decrease in accounts payable, if decrease in current liabilities, it is negative, remember. And then if for the accrued expense payable is increased, so increase means positive in current liabilities. And then decrease again for income taxes payable, it is negative. And then you sum from the above to the bottom, and then we get the net cash flow from operating activities, $100,500. So that is for the cash flow from operating activities.